Good morning and welcome to Stock Market Today. It's Wednesday, September 11th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities were mixed in Tuesday's trading. Energy was the leading sector while REITs lagged. Investors spent a second day rotating out of leading growth and momentum names and into lagging cyclicals. Treasuries were under pressure again. The dollar was stronger versus the yen and the euro. Gold finished down 80 basis points and WTI crude settled down 80 basis points as well, reversing earlier gains. So your outperforming sectors: energy, industrials, materials, and fins. Underperformers: REITs, staples, tech, and discretionary. As we get to the desk this morning, futures a little changed in Wednesday morning trading. Asian equities were higher overnight, with Hong Kong up more than 1.5% and Japan up nearly 1%. European markets are mostly higher across the pond. Treasuries are weaker following another backup in yields yesterday. The dollar is stronger versus the yen and the euro. Gold is up 10 basis points, and WTI crude is up 1.3%. So digging into the market now, basically it was another day of treading water, but under the surface, the growth to value shift continued, and we'll take a look at what that looks like a little bit later in the show. But we can see here support in the 2,900 to 2,950 zone remains in place, and the top end of that zone held yesterday as the low on the day tagged that line before equity markets reversed. Resistance is in the area between 3,000 and the July highs, call them 3030 on the S&P 500. RSI continues to move higher with price. That is a bullish sign from an indicator perspective, and that follows a series of lower highs of higher lows for the RSI. Chaikin money flow as well is bullish. So the indicators are starting to get into gear with what we've seen here with the breakout from the August range. So far, the support level is holding, but it does seem to me that we're making very little progress because investors are rotating under the surface. Right, it's happening. We'll take a look at it a little bit later in the show. Hard to peg how long it might continue or if it's something that's sustainable. We'll obviously continue to do our trend work, and if that trend from growth to value is continuing, we will adjust our views and thought process accordingly. But for now, we're talking about stocks treading water above the August range, but under the surface, the growth to value rotation continues. Software is an area where we can really see this well. It has moved from a leading group to an underperformer. Sentiment is less fearful following the lift in equities out of that August range. We'll take a look at one of our sentiment metrics a little bit later in the show, and futures do point, as we said, to a roughly flat open here today. So for the major indices, from a power bar perspective, the Dow sees a slight shift to the negative despite being up 30 basis points yesterday. 5 bullish or very bullish stocks in our model, 6 bearish or very bearish stocks. S&P 500 up 22 basis points, 121 bulls to 80 bears. NASDAQ remains with a bullish view, although it's underperformed for a second consecutive day. 21 bullish stocks, 18 bearish stocks. Small caps, big outperformer again. Again, part of this rotation. Large cap growth had been a leading area of the market, and small caps, especially the value portions of small cap, have been massively underperforming. And now there appears to be, at least for the past 2 days, a rotation within that relationship. So small caps, big outperformers once again, 592 bulls, 334 bears. Bonds under pressure, sending yields higher. Energy, another one of the areas of the market that had been a big underperformer. Well, it outperformed yesterday, up 1.06%. Still skewed to the bearish side in terms of the power bar, though. 14 bearish or very bearish stocks for only 5 bullish or very bullish stocks. And according to the power bar, small cap stocks and large cap stocks are somewhat bullish. Major markets across the board are mixed. Let's take a look at our stock of the day now. Carolina Financial Corp. It's a bank. Closed at 35.70, up 1.2% yesterday to outperform the broader market. And the Chaikin Power Gauge rating is very bullish due to very strong earnings performance. Very attractive financial metrics and positive expert activity. When we take our 20 factors, 5 in each of these 4 categories, we come out with our very bullish rating. Very bullish stock, strong trend, strong industry group, type of name we want to consider. But are we going to get involved? Absolutely not. The very bullish rating is relatively new, and the stock continues to be an underperformer against the S&P 500. We want a bullish rating and outperformance. 2 legs to that stool here to really drive a strategic view. And then after that, we look at the tactical portion of the analysis. We are overbought and money flow is bearish. So Carolina Financial might be interesting here as it consolidates. It was obviously in a strong downtrend, and now it's gone into a consolidation. But for right now, doesn't really pique my interest. You can throw it onto a bullish watch list. And if some of these dynamics that we're talking about here begin to change, it might make sense to consider it on the long side of the portfolio. But for now, it does not. We want outperformance. And once we find very bullish and bullish stocks that are outperforming the market, ideally we want them when they're oversold with bullish money flow. Carolina Financial does not fit the bill today. We'll throw it on a bullish watch list and see if the situation improves. Now, for our sector tracker, here's a real clear glimpse of the rotation that we've been talking about at the S&P 500 sector level, right? Financials and energy have been massive underperformers pretty much for the entirety of 2019. And over the past 5 days, they are now the top two groups. Energy up over 6% over the past 5 days. Financials up nearly 5%. Industrials, another lagging group. Throw that on the top of the list. Comms, discretionary, tech, and materials are middle of the road. And then the groups that had been leadership, healthcare, But the defensive areas of the market are starting to see rotation. It was the defensive areas started to get momentum. And now we're seeing a shift out of that. Some profit taking in the staples, the utilities, and real estate. The bottom two also being impacted by the fact that yields have backed up. So some profit taking in those bond proxy areas of the equity market, utilities, and real estate. Obviously hard to say how long it's going to last. We'll continue to monitor the situation. And if these trends are changing, we'll start to shift our views. Now, our industry in focus today is really indicative of this growth to value shift that's gone on, right? Software had been one of the market leading groups, but over the past 6 months, it's now started to underperform. It's underperforming the S&P 500 by 3.5%. And the power bar ratio, which measures future potential, is weak. 47 bearish or very bearish stocks for 37 bullish or very bullish stocks, and it's currently ranked towards the bottom third, 14 of 21 subsectors, and it has moved down 2 slots over the past week. So some of the indicative names there: Coupa Software, very bearish rating; Zscaler, very bearish rating; and Alteryx, AYX, very bearish rating within Chaikin Analytics. And we'll take a look at Zscaler here, because we're going to look at software a little bit later in the show. But Zscaler is kind of indicative of what we're seeing in a lot of the formerly leading software names. So I thought it would be instructive to kind of run through it today. Very bearish stock and a weak trend. Now, Zscaler had been a monster outperformer since that low in December, right? Steady uptrend, outperforming the market. But look what's happened of late. First, the rating goes bearish in mid-August. Shortly thereafter, the stock begins to underperform the market. Money flow has turned bearish. Now, it is closer to oversold than to overbought, so tactically nothing really to do here right now, but it's kind of interesting to note that we're seeing charts like this throughout the software space, right? So that growth to momentum shift, this is really indicative of that. It had been a leading group. Now it's an underperforming group. And you're starting to see a lot of names that look like this. Now, they did report earnings last night. We'll see how the stock trades. This is not a call on Zscaler. This is more of what's kind of been indicative of the trends that we're seeing in some of the former leaders. So I just wanted to call it out here today. Taking a look at what's trending now. Yesterday's S&P 500 gainers and losers are movers and shakers. Nectar, NKTR, up 11% after the disclosure of an insider buying stock. STT, some positive comments on net interest income, sent that stock higher by 9%. Remember, falling yields had been a concern for bank stocks, in particular, how it was going to impact their net interest margin. State Street making some comments to the positive side. PWR got a project win. That sent that stock higher by nearly 8%. No real news on Mattel, up 6%. And MOS announcing a stock buyback to send that stock higher by nearly 6% on the day. On the loser side of the board, MKTX presented at a conference yesterday. Obviously, investors didn't like what they heard there. Stock down 7.5%. CMG was weak. Restaurants were under pressure yesterday following Wendy's earnings announcement. As we look at NASDAQ and CME, no real news there, but I will note that those are 2 exchanges, down 5.6% and 4.7% respectively, and SBAC down 4.33%. Nothing company specific there, but it is kind of lumped in with the real estate group. So if we kind of look at the profit taking that's gone on, and within those bond proxies, SBAC under pressure, down 4.33% on the day yesterday. Let's dive into the charts now. Here's the big chart. Here is the big theme this week. You've probably been reading about it, but here it is in picture form. What we're looking at here is Russell 3000 growth relative to Russell 3000 value. And you can see that growth has been outperforming value. When the line is rising, it means that growth in the numerator is outperforming value in the denominator of the ratio. So as the line is rising, that's growth outperforming. And now all of a sudden, we've had a monster shift over the past couple of days to the point where we've broken this uptrend line. And it's interesting to me here that at this high for the ratio, there was actually a slight negative divergence in the RSI. So momentum kind of tipping its hand here a little bit. Now the ratio is still above a rising 200-day moving average, and the RSI has now dipped into an oversold position. So could see a bit of a backup here, but we want to monitor this situation closely because we have been favoring growth over value, right? Obviously, that has been the right call throughout 2019, but we want to not remain dogmatic in our views. If the evidence supports a shift in the trend, we will shift our views and our stance accordingly. And one of the ways that we're going to kind of ascertain what's going on and potential shift is by looking at the copper to gold ratio, right? Because this is a proxy for global growth, right? And copper has been underperforming gold for about a year, and that has coincided with growth outperforming value. Why? Because when copper is underperforming, it is a sign of potential slowdown in global growth, and we've seen evidence to that fact. So in that environment, investors tend to bid up growth, right? They'll pay a premium for growth in a slowing growth environment. And that is a big reason as to why growth has been outperforming value. But now we have a potential shift in this downtrend. If we start to see copper really outperform gold, it stands to reason that growth will continue to underperform value, and that would validate changing of view. A little too early to tell now, but it's something that we're watching very closely. And software, obviously, as I said, is a great example of that. Take a look at the iShares North America Tech Software ETF, IGV. Still in its August consolidation as we move into the beginning parts of September here, has not broken out with the rest of the market. Now, it is trading above a rising 200-day moving average, but look at what's happening to momentum, right? Can't get out of bearish ranges after tagging an oversold position for the first time since the lows in December. Now, hasn't broken down on an absolute basis yet, but if we look at software, IGV, relative to the S&P 500, we can see that we've broken this uptrend line. And if we drew these lines here, we're actually taking out support. So this is a former leading group, a former proxy for the growth theme, breaking down on a relative basis. Has not broken down absolute yet, still within the range that is defined trading for the past 5 weeks, but evidence supports a potential breakdown here, right? Relative strength rolling over, momentum failing to get out of bearish ranges. We have to start thinking about what a test of the 200-day moving average could potentially look like for software. We showed you the industry group earlier with the power bar ratio being negative, some of the indicative stocks there. Here's a bigger picture view as well. It's just kind of interesting to me that this has been the poster child for growth over value, and now it's struggling. So obviously we'll continue to watch these data points for signs of a further breakdown. And what's happening is investors rotate into the value groups, right? Here's financials on an absolute basis. Nice bounce off the 200-day moving average. RSI moving into bullish ranges. Still in a downtrend versus the S&P 500, but on the verge of testing. So we'll see how it plays out on a relative basis. Continue to focus on this rotation that's taking place and see if it has legs. And finally, as we said, sentiment with the breakout in the market has become less fearful. Here's a 13-period moving average of the CBOE equity put call ratio. You can see we got to an extreme measure of bearishness coinciding with a test and hold of the August lows, and now the market has broken through that August consolidation. Sentiment still in the middle of the range, certainly less fearful than it has been of late. You see these pops over 0.75 tend to coincide with lows in the market. That's going to wrap it up for today. Head over to the website, check out the email. I'll be back here tomorrow.